The VIX was up about 8% today. So again, it looks like some hedging very well could be starting to take place. We're up nearly a point to just over 13. We were just over 12, about 13.28 or so. Again, if we start getting back above the 50 period and the 200 period moving average, volatility will return. S&P has moved to a higher high. The VIX has gotten a higher low discrepancy. Oftentimes discrepancies will mark turning points, not always, but oftentimes they do. We push below the lower band here, got the inverted hammer, and we turned back up, got another inverted hammer just above it there, holding above it, and we closed today above the 10 and 20 period moving average after Tuesday closing back below them. So again, we'll be watching to see volatility starts creeping higher here, start seeing some distribution taking place on the S&P that starts a reversal. And if it does it first turn momentum, and then we start seeing trend signals begin to change. We started the week off strong with the rally. The NASDAQ got that 9 count. S&P perfected the 9 count sell signal. I told you, watch to see, do we close strong or do we close weak? Because we've got these divergences in the weekly time frame. This is the linear chart. Again, I had this trend line excluding the shadows. We're overthrowing it. If we include the shadow right here, if we include that shadow, parallel boundary to the lower boundary, we're coming right up into it here on the NASDAQ. NASDAQ, the sell-off that we had on Thursday created a little topping tail here, but we won't know until we see the close on Friday. So again, we'll see. Do we get a topping tail by the end of the week here? Is it something ugly, or is it a big red bar that's a dark cloud cover candlestick? Close strong, and we'll be watching to see how we close. And it just something we're paying attention to, because again, we have this divergence, and this divergence over here gave us this reversal. The bullish divergence over here gave us the bottom over here. So this one's likely going to produce a reversal. This divergence right here gave us a correction. This divergence gave us a correction of 8%. So again, this divergence is likely going to produce a reversal. Just some trend lines I'm looking at. Again, we had the rising wedge here on the linear and on the log scaling, and we overthrew it just a bit. Watching the channel, and also you got these other divergences going on, and on the MACD down here, it's on the awesome oscillator, it's everywhere, these weekly charts. Another trend line I'm looking at on the NASDAQ is, again, I had this drawn from back over here, and we overthrew that trend line on the NASDAQ. Okay, but again, if we take the trend line, just connecting this peak here, excluding the shadow, and this peak right here, we're kind of slamming right up into that area right now on the NASDAQ 100. I don't know if it'll mean anything, but just something I'm paying attention to. I'm going to be watching to see if we close strong or weak. This is NASDAQ up close, and again, if we close something like this or go red by the end of the week here, you might have a topping tail. We'll see if we rally back up or not. Here in the weekly time frame. Piece still up 44 points for the week, up 0.77 for the week. It was up over 0.5%, and again, pressure on Thursday could produce a topping tail here. We'll see, do we close strong or do we close weak? We'll see how we close. But regardless of how we close, whether we close strong or weak, watch the divergences in the weekly time frame. They're going to produce a reversal. It might be that a candle pattern forms. Patterns don't always form, but like over here, we did get a bearish engulfing here in the weekly time frame that marked the high. And then we got a lower high, and it ended up diverging with the S&P later. So again, just something worth paying attention to. Over here, you got a topping tail. Over here, you got a doji bottoming tail, a doji cross. Over here, you got a topping tail. It doesn't always happen, but sometimes it does. Over here, you got a little topping tail with the lower high. Sometimes candle patterns form, sometimes they don't. Again, I told you at the previous peak, before we ever hit the 20-period moving average, 20-week moving average here, that again, we could rebound and form a lower high or a higher high, or break it and form a feeble lower high. Those were the three scenarios that I was talking about. Ended up getting the higher high, the divergence scenario. We'd either see something like this with a lower high, or something like these peaks with a higher high. With divergences. This one is likely going to produce a reversal. NASDAQ got a divergence, gave us the 8% sell-off. S&P moved to new high here. It never did form one. We're now getting that divergence. I talked about that trend line connecting this peak with this peak. We overthrew that level last week. And again, if we slightly exclude the shadow right here, you've got still another nice looking channel here. We have overthrown it. Remember, I told you when we reached the peak over here at the March high, Bitcoin had a channel. It overthrew it, got a topping tail. We could see something like that here. Even if we don't close weak, the channel's still in play here. Even if we close strong, just a slight overthrow. Same thing here. Again, you've got this divergence forming here. Prices going higher. The indicators making lower high. They're diverging from one another. And that's what marked the turn over here. That's what marked the turn in 2020 at the 2020 peak. What I'm going to be watching is, do we get something that looks like this, or something that is a well-defined reversal candle pattern? We don't have to. We could just kind of go up here and then just kind of turn, something like right here. So again, we'll see what happens. But these divergences are going to play out. The complacency through the roof right now. And if we do start to turn here again, if you start coming back here, taking up the 20-week, then again, you've got the possibility of a head and shoulders, or even go a little higher and get it. But it is possible that we turn. If we sell off with the options expiration on Friday there, or if we go a little higher, do we close strong or do we close weak? Doesn't matter. However it unfolds, these divergences will play out. Please support the channel with the link directly below. That allows me to be able to provide you this information. Like the charts and indicators, please partner with me and support the channel today. Rather than getting sponsors, I just turn all those offers down. I don't want to sell you stuff. I just have a direct relationship with you. Just ask that you do what you can to help out. Time and effort goes into doing this. So if you could take a moment to help out today, I would really, really appreciate that. Just follow the link below to take you to a secured site. You could donate any amount you want or make it a recurring donation. If you do that, I thank you. Just consider supporting the channel today. It'd really be encouraging to hear from you. Thank you for your consideration for that. We are starting to see signs of distribution here. May not be done. That doesn't mean a top. Started seeing signs of distribution on over here. We saw it over here. We still have a bullish signal here. Critical mass cloud. But you do have these negative divergences that have formed. So I just wanted to point out with today's selling, we did see some distribution. Reversal to happen, we would need to see more. Eventually, the trend signals flip to bearish. Still on a bullish signal with our signal. Now again, momentum and trend signals still remain bullish. Again, back over here, we never saw trend signals turn bearish. We found support at the 50-period moving average seen on this chart. Bottoming tail in that area. Momentum signals turn, but we never saw any other evidence of signals turning. Short-term momentum tops, candles, and again, momentum line turning red. I told you here something big was going to happen. We're going to rally up towards the upper channel line. We've done that. Told you we could even overthrow it. It did do that. I told you over here we consolidated some more, and I told you again something was getting ready to happen. That we formed the bull flag on the 15-minute chart, and that we were going to see a CPI rally. We did that. Now we're up here at this resistance level, forming these divergences on the weekly chart. So we'll be watching for a reversal. Much complacency. The bulls feel invincible, and that is lulling them into a false sense of security that possible way that the market could go down. We are ripe for a reversal there on the weekly signals with our negative divergences. The complacency that we're seeing right now is really a warning sign that it is going to happen, but we need to see a turn here with momentum. And then if momentum turns, we got to see the swing trend signals turn bearish if we're going to turn and start getting a bigger drop. If we're going to form a divergence, we'll see momentum turn bearish. It will turn right back to bullish, and it will form a divergence on the RSI in the daily time frame should that happen. No requirement that happens, but it could. So again, one of those two scenarios are going to be likely unfolding here very shortly. At this time, there's no signals. We'll see if they show up this week. Shortly thereafter, we did get signals here. We did get bullish signals here. Here it was just momentum. We'll see if we start seeing any kind of warning signs. Now the same is true for the bars reflecting the trend. The color is still green. Momentum here is still blue, and the trend again is still positive. Momentum and trend signals remain bullish. Balance of power remains bullish. If we're going to see a turn, this has to start turning red. Watching those divergences in the weekly time frame, do start selling off. Again, there is that possibility of the head and shoulders pattern. If we start getting a strong sell-off going into the July meeting. The FOMC meeting is late July. Don't forget, we've had that recent strength with the dollar, and in the weekly time frame, we got the bottoming tail just over 2 weeks ago. That could produce a reversal with the S&P 500. And I'm already starting to see news articles about it. Fed's keeping rates too high for too long. I've seen 2 articles about it over the last couple of days. Again, the Fed meeting did what I warning that they were going to do, and that was lower cuts in 2024 down to 1 or none. They did it down to 1. The market didn't expect that because it's not having an immediate reaction to it. Conventional wisdom, well, it's not going to happen because it didn't happen yet. Again, the market is in a topping process in the weekly time frame. It takes its time doing what it's going to do. See the divergences that we're watching. The narrative, I told you, is already being presented, and again, I saw it. Couple of articles already. Narrative is going to be the Fed is keeping rates too high for too long at a restrictive level, and they're going to push us into recession. That's going to be the catalyst behind the next sell-off. A combination of things. Tensions are really heating up here between the U.S. and Russia. Sometimes geopolitical issues are a catalyst. Those, some other catalyst. So we'll see what happens with options expiration tomorrow. The dollar did get a double bottom. It broke out of a downward trend line. Time frame back tested it and got that bullish hammer just over 2 weeks ago. It got confirmed. We'll see if we get a follow through, which would be a push above the high from last week. Might buy some more time. This is a huge warning sign because again we broke out, and then we back tested downward trend line in the weekly time frame. I've shown you that chart a million times. What I'm talking about, I don't have time to show you today. We've got these divergences on the ASM oscillator. We had a red bar to start the week off, and that was up until today's session. It went away. We'll see if it closes with the red bar. Maybe, like I said, get it over the next week or two. We may start the sell-off before we get it, or we may have it by the end of the week. We'll see, but that has showed up is suggesting momentum is starting to wane. We have these divergences on the MACDs as well. So again, we'll be watching. Does a reversal start? We go a little higher and then start it, form those channels on the 60-minute charts I've been talking about. But keep your eye on these divergences in the weekly time frame, the MACD, the ASM oscillator, RSI, and a lot of other indicators. S&P weekly chart, we did get a red bar for the ASM oscillator in the daily time frame. The ASM oscillator, like the MACD, has moved slightly higher. MACD has moved slightly higher, so you still might form a divergence. But again, with today's selling pressure on our sloppy engulfing candlestick, you got a nice looking one on the NASDAQ, a sloppy looking one on the S&P, but you did get a red ASM oscillator bar here with today's down day. See if that continues, and again, it still might be that you get divergences forming here, that we go down and then we end up going back up and forming a divergence before all is said and done. We did that over here. We went slightly higher. Could go higher than just 3 points right there, but again, it is still a possibility. You don't have to form a divergence, but you could. P daily, and before that was the S&P weekly. DAC and ASM oscillator and MACD again have both moved to new highs. So has the RSI. Got that bearish engulfing candlestick. We need to take out these 10 and period moving averages if we're going to see any kind of sell-off. We need to see a bearish reversal of conditions. Momentum is again bullish. About it flipping back to bullish back over here, and then I talked about the bounce off the 50-period moving averages, and then it flipped back. And remember, I told you something was getting ready to happen. We're likely going to go higher, and we weren't able to flip the trending signals with that bearish signal there. Red bar in the daily time frame. We'll see if we get one before the week closes. We'll see if the bearish engulfing candlestick gets confirmed. Same thing here, again, on the weekly chart. As I said with the S&P, you got this divergence going on. There was no red bar at all this week for the NASDAQ, but you got the same divergence here in the MACD. So again, this is likely going to play out soon. So you've got a possibility of a turn this week or next week. We begin to see momentum shift in the daily time frame. Weekly chart of the NASDAQ here. Now, I told you in Tuesday's update that I was looking for a divergence here in the 15-minute time frame. Didn't think it was quite done in the 60-minute time frame. We got that completed today. Again, coming right up into this trend line right here from this high and this high. We're going to have options expiration tomorrow. Today we got a gap and trap. On an intraday basis, we gapped higher, and then we turned and moved in the other direction. And in the bottom on the 5-minute chart with the divergence right there, and then we got a higher low, again, some bottoming tails. We'll see if we can get back above the 50-period moving average. We might go back up to that trend line again and form a triple divergence. If we don't, then it could be done. If you look at the price action right here that completed that divergence here, let me show you on the 5-minute chart the bullish divergence down here at our cloud of support here in the 15-minute time frame. Before I leave this chart, again, we had these bullish falling wedges. I talked about these bullish falling wedges before CPI, and then after the Fed meeting, we saw some volatility surrounding the Fed, and we formed this bullish falling wedge, and again, we broke out of it. We talked about this at great length and detail. Actually, 3 of them, but another one goes back further, but I've talked about them, and you had a triangle in there as well. I wanted to show you this up close, and again, I'll show you this divergence right here. Watching, okay, is this divergence now done, or is it going to form a triple divergence? And we go up and hit this level one more time. Here it is on the 5-minute chart. Same divergence, gap, and then trap. Gapped higher, and then we moved in the other direction. The S&P ended the S&P ended down by 0.25%, down 13.81 points, so just under 14 points lower. Closed at the lows of the session down here, but again, we did sell off, and then we formed this bullish divergence. We went back up to the 50 as we got the 50 crossing the 200. So now you have this death cross. We got to be able to clear this level and get back above it if we're going to rebound, recover. If we get rejection here with the death cross, again, we can go back and take out this low, and that may be it with the divergences that formed with today's high. The sell-off back to these lows right here took us back to the rising trend line on the 60-minute chart, and I'll show you that in just a second. But again, I talked about this in the last update. In order to go lower, we've got to drop below the 200 and then stay below it. Well, we dropped below it, and then we struggled at it, couldn't get above it here, rejection at the 50, and then we closed just right underneath it here, but we do have this death cross. So is that going to be a continuation of this, or can we recover? If we recover, we got to get back above that 200, be able to stay above it, get the 50 quickly going back above the 200. Otherwise, the divergence could produce a larger sell-off. But these lows right here, as I was saying, we hit the trend line of support on the 60-minute chart, that channel. 60-minute chart, we came right down to this trend line, and we attempted to rebound. Pretty much closed right on the trend line there. So again, slightly breaching it on an intraday basis here, but we're pretty much right at it. Are we going to bounce here and go up here and hit this trend line? Remember, I talked about these parallel boundaries. This red one here from these lows connecting the steeper angle of ascent with the trend line. I've drawn a parallel boundary from this high, and that just takes us directly overhead. The blue line, I've connected these two lows down here, and again, I've drawn a parallel boundary from this line right here, and that, again, is also directly overhead. No guarantee we make it to that level, but it could be that we attempt to do it. The diversion's completed here on the 60-minute chart, and again, we went higher, we gapped higher, we completed the diversions today, went right into that trend line there, forming this rising wedge. Haven't broke down. If we bounce here, again, you might buy a little bit more time and then break down, or again, below that 200 period on the 5-minute chart, then look out below. You start taking out yesterday's low and breaking this trend line with a decisive break. Maybe that's it. It's still possible that we get a divergence that looks something like that if we push on higher with options expiration and then begin to turn again. The question now is, are we going to bounce off support here? Or are we going to start breaking this level, breaking the momentum cloud here, breaking the trend line? We attempt to get one final push higher. The divergence that developed over here, we ended up going a little bit higher. We got a gap and trap, and then we started to reverse. We still see something like that if we still try to make it up to this level. Just because I've drawn these trend lines in doesn't mean we have to reach them. Again, I'm just drawing plain connect the dots here. Still may have something that looks like this, but again, watching today's low, do we bounce or do we break this level? The negative divergence on the MACD And still the possibility of a triple divergence there, but again, it's possible that we start breaking key levels of support. Now, if I include the shadow over here, then we're right at that level. If I exclude it, then we've slightly breached it, as we saw in the other chart. Here, I've included it, and we're right at that level. So again, you're watching the trend line. Do we get one more push into this trend line to make a rather nice looking channel, or is that it? Is that all she wrote? We did roll over here. Do we end up turning back up? Start getting the dump right here and right now. Again, options expiration, so there could be volatility in either direction throughout this week, down, up and down. See how we close the week out. And I'm watching these trend lines. No guarantee that we reach them. I just have one touch here, and we could get a second touch, just a parallel parallel boundary to this low and this low. Same thing for the NASDAQ. Again, we came right to this trend line. Again, had a slight breach of it here. And again, just kind of resting right on it. Do we get one more push up into this level? I've just, again, drawn a parallel boundary to these lows over here. Okay, and that doesn't include the low here. And that's just a parallel channel. So we still might try to make it up there. We did see this divergence play out here. And we ended up rolling over here. Had a little miniature divergence today here during the session. Ended down. You know what wasn't down? Was the Dow. It was going to try to rally up to that 61.8 Fibonacci. It did that today. Again, if it goes deeper into the Fibonacci golden pocket between the 61.8 fib and 78.6 fib. So again, do we break this level here, or do we start bouncing off of it and going to one more high? And again, stack down 156 points, losing 0.79%. Do we go deeper into the negative region here, or do we start firming up like we did over here? But I'll be watching these channels, and let me show you my, and I stand corrected on a divergence here. We went higher than Tuesday's high, but still not Monday's high. So again, we're trying to curl up on the RSI. If we could turn back up on the RSIs in the 60-minute time frame, you still might get that push up here into this level. And if you do that, we'll have a fairly nice looking channel. I'll be watching what becomes of the RSI here in the 60-minute time frame. MACD did the same thing. It had already rolled over the Monday session, continued to be negative. Well, the Tuesday session and on into today. The market was closed on Wednesday for the holiday. One other channel on NASDAQ, again, connecting this low and this low. I got the blue line here. If we take it from the high here and go back to this level over in here, we've got a possible channel. Well, the NASDAQ and the S&P were down. I was up, and I told you to be watching for this, to be watching for a move up to the 61.8 Fibonacci or into the golden pocket. 78.6 Fibonacci be up here somewhere. Be watching to see what happens. We were up 300 points today on the Dow. It was up 0.77%. Well, NASDAQ and S&P were down. So what I'm watching is, do we have a double top? Do we have a double top? Well, we're forming the head and shoulder formations on the S&P and NASDAQ. If this high holds, then we should see a lower high. Now, maybe that is an ABC move that looks something like this. Maybe it's something like this, a larger retracement. But it's what I'm going to be watching is, do we get a lower high here at the 61.8 Fibonacci? We're just under it. Be a little higher into the golden pocket between the 61.8 fib and the 78.6 Fibonacci. MACD is turning back up. So again, the Dow doing what I told you it was going to do. And we got that bullish cross today on the MACD. So we could see the Dow get a bigger recovery. The thing to be watching is, does the Dow stop making new highs? Confirm a lower high on the MACD and the RSI. And again, it may go deeper. You even see the Dow continue to rally as we start seeing distribution with the S&P and NASDAQ. That often is the case. As we're reaching extremes on the RSI, we got a possible bearish engulfing, maybe sloppy bearish engulfing, but we didn't close at the lows of the session. It would have been a really nice looking bearish engulfing had that happened. Again, if we exclude the shadow down here, you still have a really nice looking rising wedge pattern. And again, I'm just connecting this peak right here to this peak, and we went up and we hit it today. We closed below the lower Bollinger Band, by the way, that I've been talking about. But if we follow through to the downside with today's selling pressure, we get a follow through, then again, we might start a reversal. It might be that we just turn off of the trend line connecting these two levels here, where again with the S&P, I'm not doing that. I'm just connecting these lows and then drawing a parallel boundary, not connecting the highs at all, just drawing a parallel boundary. That we do have a better looking rising wedge, and that's it. We don't reach these levels, a rising wedge in the daily time frame. So again, this is just speculation, just drawing to see if we reach these levels. I've just drawn parallel boundaries, parallel channels here in the 60-minute time frame, whereas the daily chart, I'm connecting these levels here, and then again excluding the shadows here, which are these lows in through here. Compare this 60-minute chart with the channel, and the one here with the one right here. Again, just connecting those highs. So rising wedge possibly if we start to turn, maybe a channel if we go a little bit higher. We did reach extremes, we're turning down. Still got the possibility of a divergence here if we start to sell off and come back up. So keep that in mind. You have to form a divergence, and we may not, but it's still a possibility. You formed no divergence down here at the low. You formed no divergence when we had the summer rally in 2022 to the August high. There was no divergence there. At the February high, there was no divergence. Other times you get it. Sometimes you don't. Which will this be? We'll be watching. CD is also moving to a new high, so there is that possibility. So if we do sell off, signals would have to remain bearish in order to go lower. If they turn bearish and then turn right back to bullish, then you got the possibility of a divergence in the daily time frame. Again, good chance a head and shoulders pattern is forming here. And again, if we come back and we start breaking the 10 and 20 period moving average, breaking this trend line here for a rising wedge and so forth, doing technical damage, then again, this pattern would be very much in play. The candlestick we got today is a bearish, a sloppy bearish engulfing candlestick at best, because again, we did not close below this low right here. We did on an intraday basis push below it, but did not. We did close below the low of that open of the candle there, but again, so not the best of the candles there, but is what it is. What I'll be watching is, do we start closing below this low tomorrow, or do we push higher and then turn, or back and close below it? That's what I'll be watching. S&P daily. On the other hand, NASDAQ got a very clear bearish engulfing candlestick. We had the doji, okay, and it's bearish engulfing. Very sloppy evening star. The doji usually is a little bit higher than both candles, but again, I think it more qualifies as a bearish engulfing, 2-day bearish engulfing. You have the doji, followed by the gap higher, the close below the previous day's low. Here we actually did it. On the S&P, we did not do that. So you do have a bearish engulfing candlestick here on the NASDAQ. We'll see if it gets confirmed with the close below this low, and then a follow through 10 period and 20 period down here. We'll be watching those levels. Same thing here. We reached an extreme with the RSI, and we hit that upper Bollinger Band, and we're seeing a little bit of volatility now with this potential bearish engulfing candlestick. MACD moved to new high, hasn't rolled over yet. So again, we'll be watching to see what happens here with options expiration. Same thing here. You've got the possibility of a head and shoulders pattern. And again, if the divergence does develop, again, look over here. Again, we went down and then we went back up to form a divergence that eventually gave us this sell-off, but it went just a little bit higher. Could be the case here if a divergence tries to form here in the daily time frame. Just something worth paying attention to. If signals turn back to bearish, they have to remain that way to go lower. If they turn back to bearish and turn back up, you're likely going to see a divergence form. So keep that in mind. NASDAQ daily chart here. Possible that, again, we have the rising wedge on the S&P rather than the channel, because we have the close back below the upper Bollinger Band. So we'll be watching to see what happens now. Again, we still may go up here and flirt with this area a little bit more, even get a topping tail. But again, I'll be watching to see, do we try to rally on Friday? Do we go back up here, or is that it? We had a couple of closes above the upper band, and then now we're pushing back below it. I told you over here with these bearish candlesticks that formed, there was no confirmation, and again, signals formed another bull flag. We were going to confirm the 9-count sell signal here. You can see the 9-count was confirmed on Monday. We closed above bar 7, which I've talked about. We now have a confirmed reversal signal for the S&P 500, a 9-9 reversal signal. Again, sometimes you get these 9-9 counts, you go a little higher. Other times you turn immediately. So again, we'll be watching to see what happens here. If we start to turn, we need to get a price flip, meaning we need to close, the bar needs to close below the bar from 4 bars ago to start a new 9 count to the downside. 1, 2, 3, 4. If we're going to get a price flip tomorrow, we got to close below that bar 9 right there. I told you over here that something was getting ready to happen to the upside, likely to go up and hit resistance level in the weekly time frame or even overthrow it. We ended up overthrowing it. I've talked about that at great length and detail. Again, eventually we're going to make our way back down over here in all likelihood. You got a possible head and shoulders. If you do that, going into the next Fed meeting, it can sell off into July or the following meeting on into September, one or the other. We'll be watching, but you do have a possible head and shoulders here and the completion of a 9-9, which tells us prices are getting tired. That's what that means. Price exhaustion. Possible 5-leg count higher here, as I've talked about. A 5-leg move here that may or may not be done there on the intraday charts. Again, we got that 9-9 sell signal. I talked about that. We got that on Monday. I told you over the weekend that that was going to happen on Monday. That's why I told you I thought that we'd rally higher. S&P 500 to perfect the sell signal on the S&P. That has now happened. We've gone a little bit higher. NASDAQ at the 9 count. That was the high of the count so far. Again, we tried to go a little bit higher than the previous day's bar on Tuesday. Today's high, but again, failed to go to a new high there, slightly under that level. So you have a 9-9 reversal pattern. Again, we may go a little higher. It may start the turn right here, right now. Do keep that in mind. Start selling off sharply tomorrow with options expiration. This could be a peak right here with our 9 count that we got there on Monday. About the possibility of a rally early on into the week and a sell-off later in the week with this short trading week. That's still a possibility. That's still on the table if we don't form a channel, those 60-minute charts. We don't have to form a channel. We don't have to go up to those trend lines. I just drew them in there, parallel boundaries as speculation. If we do rally, but momentum is still bullish, we'll need to see signals begin to turn if this is a peak on NASDAQ and S&P. Again, we closed below the upper Bollinger Band here. So again, it's possible that we attempt to turn. And again, turn, you still might form those divergences on the RSIs in the daily time frame. So be aware of that. Signals begin to turn bearish. They have to remain that way to go lower. If they turn bearish and turn right back to bullish, you're likely going to get that divergence on the RSI daily chart on S&P and NASDAQ. I just want to bring this to your attention because that other chart didn't have the 78.6 Fibonacci. It's possible that we see the Dow go into the golden pocket. If it gets above it, then you got a shot at new highs. But again, the possibility of a double top is still very much in play. Got a 9 count sell signal. We went a little bit higher, and then we turned and we saw that sharp sell off with the Dow. That's what I'm talking about. How sometimes you go a little higher, other times you turn immediately. Here we went with the 9 count a little bit lower, and then we turned. 13 count went a little bit higher, and then you turned. Counts show, hey, prices are getting tired. That's what they're telling us. Price exhaustion. But again, 78.6 Fibonacci coming in here at 39,625. Currently, we're just below the 61.8 Fibonacci at 39,272. So just some levels to be aware of on the Dow. If we end up getting an ABC move here or up into here, we could see a lower high try to set up on the Dow. The NASDAQ and S&P were down today. The Dow was up. You could end up seeing more than that if the Dow gets a bigger Fibonacci retracement and if we start seeing distribution on NASDAQ and S&P without going higher. It's just something worth paying attention to because the Dow was up 300 points today. Talking about this possible ABC structure that could be in play here.